DeFi projects on Arbitrum are seeing a resurgence, with native projects like GMX for derivatives, Camelot for DEX, and Radiant for lending garnering significant attention. What other Arbitrum-based DeFi projects are worth keeping an eye on? The first project, ZyberSwap. ZyberSwap is a DEX that launched in late January, and its token spiraled down to near zero in value by the end of that month. However, due to the resurgence of DeFi on Layer 2, the APRs for the ZYBER ETH and ZYBER USDC pools have recently approached 2,000%, and the price of ZYBER has remained stable and even increased. With DEX leader Camelot having a TVL of only $62.73 million on Arbitrum and an FDV of $300 million, there may be room for development in the DEX race. In terms of its product, ZyberSwap also features a Uniswap v2 Plus curve-type DEX and launchpad, but its token doesn't have the complex locking mechanisms of Camelot. The trading fees for non-stablecoin pools are 0.25%, with LPs earning 0.15%, and users who lock up ZYBER can share a portion of the fees. Currently, ZyberSwap's TVL is $90 million, surpassing that of Camelot. The second project is Solid Lizard. Solid Lizard is a DEX forked from Solidly. With the support of well-known DeFi developer Andre, Solidly once had over $2 billion in liquidity, but it plummeted after Andre announced his departure. Currently, the VE3 model has achieved good results on Velodrome on Optimism and Thena on BNB chain. Solid Lizard is also making a push on Arbitrum, with its TVL currently at $34.69 million, having risen 158% in the past 24 hours. In projects like VE3, liquidity providers usually don't have a strong incentive to stake the DEX's native token. In Solid Lizard, staking SLIZ tokens can increase liquidity provider mining rewards, which is a small improvement on the token side. The third project is GMD Protocol. GMD Protocol is a yield optimization and aggregation platform that employs a delta-neutral strategy to generate yield. Half of the yield is reinvested while the other half is distributed to GMD governance token holders as protocol revenue. GMD achieves delta neutrality by splitting the assets in LP tokens into single assets and allowing different depositors to contribute. LP tokens are used to generate yield while making the risk of different depositors close to delta neutral. For example, for GLP strategies, depositors can contribute any of the three assets, namely WBTC, ETH, or USDC, and the vault's quota is set based on GLP's asset composition. This can simulate GLP's asset allocation for depositors contributing a single asset, making the strategy delta neutral. Recently, GMD has hit a new TVL high, increasing by 78% in the past week. The fourth project is GammaSwap. GammaSwap is a project that allows traders to leverage long volatility or hedge against impermanent loss. It builds an intermediary layer between users and AMMs. Liquidity providers can provide liquidity by supporting AMMs and depositing LP tokens into GammaSwap. Those who need to hedge against impermanent loss can use one of the assets in the LP as collateral to borrow LP positions with leverage, and separate LP into individual tokens, paying interest. Depositing liquidity into the LP can receive deposit income. If the volatility is high and the impermanent loss is large, the strategy of separating into individual tokens will be profitable. GammaSwap is seeking to collaborate with many DeFi projects and has initiated a proposal in the Olympus DAO community, which mentions that the annual APR of the ETH trading pair's liquidity provided is approximately 1.35%, but the impermanent loss is approximately 2.1%. Providing liquidity will also result in losses. Therefore, GammaSwap proposes to deposit 1%, $500,000 of the liquidity owned by the Olympus protocol into GammaSwap to earn higher returns. The project has received a grant from Balancer and has funding but has not yet launched its token. The fifth project is WINR Protocol. WINR Protocol is a project designed for on-chain liquidity and incentives. It builds a liquidity pool called WLP based on GLP, which consists of 50% DAI, 35% ETH, and 15% WBTC. Developers of other projects can also propose to connect their games to WINR's liquidity pool through WINR DAO, providing direct payment to game players. Users who provide liquidity are also opponents of these gamers. For example, a leveraged long-short game can provide collateral and trade through WLP. WINR generates unmodified random numbers through a decentralized oracle, which is also suitable for other gambling games. The team is also developing Just Bet in the WINR ecosystem. WINR Protocol will have its IDO on Camelot on March 6. The sixth project is Nitro Cartel. The Nitro Cartel team plans to build an index product called Arbitrum in the Arbitrum ecosystem, which provides a basket of risk exposures to native assets on Arbitrum. The first product of Arbitrum is the ALP Index, which includes governance tokens of several top projects in the Arbitrum ecosystem such as GMX, Magic, Grail, DPX, Jones, RDNT, and GNS. Users can mint ALP with ETH as collateral and stake it on Arbitrum to earn Estro, while Arbitrum earns profits through liquidity mining with the underlying assets and distributes them to users. Arbitrum held its IDO on Camelot from February 17 to 20. The seventh project is Perp Finance. Perp is a copy trading system for GMX. Any trader can create a trading vault in Perp, link their wallet address and Twitter account, and share it on Twitter to attract followers. Users who choose to follow can deposit funds into these trading vaults. The creator uses the funds to trade on GMX and earns a performance fee. Each trading vault is like a fund, and the creator is the fund manager. Currently, Perp Finance's product is already live, with a total trading volume of only $1.85 million. Perp's native token PRI will have an IDO on Camelot on March 16. The last project to introduce is Factor DAO. Factor is an on-chain asset management platform that aims to become a liquidity aggregation layer, unifying the fragmented DeFi markets. Any project or individual can act as an asset manager and create a vault on Factor. Investors can deposit funds into these vaults with one click to earn returns. Asset managers earn profits through set strategies, such as creating an index with a basket of assets, yield strategies, or derivatives. Currently, Factor's products are not yet online, and the project's token FCTR will be available for IDO on Camelot from February 20 to 24. Great! It was my pleasure to assist you in translating and transcribing the content. Don't hesitate to reach out if you have any further questions or need assistance in the future. Have a good day.